Hey, what's up, everybody? Thanks for stopping by. Today's Friday, May the 5th, Cinco de Mayo. Um, even though that's not a real holiday, whatever. Um, yeah, this is Elite's Weekly Recaps. We're going into episode 5 of Finding Your Way with LasagnaCat. Last week we gave him a homework assignment to add moving average to his first setup. He's going to share his progress, and then we'll have a moving average lesson after that. Um, so take it away, LasagnaCat.
All right. Okay. Do. Let's fix up my screen. Let's see.
Go ahead and share your screen when you're.
It's actually telling me I can't do it right now. It's weird. It says you cannot start screen share while the other participant is
Oh, yeah,
sharing.
you're good now.
All right, cool.
Let me stop my share. Go for it.
All right, cool. All right, here we go. Hello, everybody. This is LasagnaCat. So I've been doing my progress here, for a couple weeks. So we first identified the setup that I want to use as my go-to setup, my first go-to setup. So this on the screen right here isn't one from this week. It was from one of the initial ones that I played when we started this. But this is like a good example of the ideal setup. It starts with a dump going down to a low, in this case, a new low. It could be a higher low, but in this case, it's a dump to a new low. It's just that it has to start with a dump. And then get a good look from RSI, get a good look from MACD, a good look from Bollinger Band. And then what I look for is like some higher lows. So with the setup, sometimes I enter on the first higher low, sometimes I enter on the second. The second one I find is a bit more reliable. It also involves, once I see some of these indicators to start lining up at support, is to draw a fib from the first red pullback or the first sort of tippy top high back down to the bottom. And then it involves a fib add zone entry up to ideally a target or a moving average target. So most of the trades that I'm going to be showing today are like an iteration of this type of setup. Sometimes they'll be from a new low, sometimes they'll be dumped to a higher low, something like that. Some of them are going to look better than others because I'm still tightening up my ability to do this, but it's going really well with this setup. And as Semper explained, there's also adding moving averages to my trading. So I've got one really great trade to share for you from a moving average setup that I'm liking. On Tuesday, I identified this play that Semper told me about last week, and as well as some insights that Brandon shared about moving averages. So on one day, I identified this awesome moving average setup, and then on the very next day, I saw it again, and I capitalized on it big time. But that's coming up a few recaps from now. But now that you get a little idea what I've been up to, I'll jump into how this week went for me. All right, so I took 2 trades on Monday. Both were green, which is an awesome feeling. All right, so this one is sort of different than the ideal example that I showed you, because the first one, the ideal one, was a dump to a new low. And I'm not saying that a dump down to a higher low makes it less ideal. It's just new. It's different than what I've been doing. Also, this isn't quite a dump. It's a pretty big pullback, but whatever. I thought it looked good, and it did coordinate with my basic rules of the setup. And so I'll walk you through it. All right, so big move up, and then a nice dip down. Actually, when you look at the size of this big red candle, that is a pretty big dump. I mean, shit. And can you imagine, like, I don't really remember this day too clearly at this point, but imagine seeing that big red candle. That big red candle was that big at that point. So I had before it got up this big, I had this initial fib drawn. You see this red top right here, this nice red rejection. I had that pulled down to the bottom green wick for my fib. So as I was watching price action deal with this fib, I saw that smashed through the 161 fib and hit the 200 fib for a perfect rejection and dump down. So when you get used to moving averages, when you get used to playing fibs, you'll often see that it'll make it to the 200 fib and then come back down and decide what it wants to do. So keeping in mind that I was maybe looking for a higher low to play off of, maybe a higher low, maybe a dump down to new lows, I said to myself, well, maybe we'll get it at some kind of higher low. When I was telling myself that, I was like, well, okay, where could that higher low be? So when we hit our higher fib target, sometimes we look for a pullback down to the 100 fib, which is like, the top of the fib that we initially drew. Oh, and by the way, if anyone is like needs me to slow down or has any questions or anything like that, please just jump on in. No need to hold back. But yeah, as I was saying, I was like, all right, what would a good pullback be? Dump down to new low is awesome, but what would a good pullback be? And I thought, well, my 100 fib from before, because that's a like a very consistent moving average, very consistent fib sort of price action play out. So yeah, so huge dump down happened, and then boom, it was playing around right with my 100 fib here from the original fib. And it was tagging this 200 EMA down here and 100 EMA. Elites is really a lot about the 100 EMA. This huge broad yellow line is the 666 daily SMA, which Elites introduced a while ago, and like we're now using it, and it's really strong. I'm not too sure who introduced that, whether it was Brandon or Connor, but one of them brought it into the systems that we use, and it's been great. All right, so moving right along. So it hit this likely pullback, but I didn't want to get in on the pullback because that's just not my play style. I'm not that good yet at being like, well, it pulled back to this support. I'm just going to take it for granted that it's going to hold here. What I needed to see was like, some kind of price action with the higher low. Oh, Hotbod Kev just asked a question. Have you tried your strategy on an inverse chart when price is going up? You mean if you like take a chart and invert it so you can spot where to go short? You mean like for a short play? Because I mean I'm sure that would work just as well. I'm only looking for longs though, Yeah, no, I never did. I've inverted charts before, like when trading what do you call it? Like back when I traded equities. But lately I've been just lasering in on doing on doing longs. So I haven't looked at any inverse charts in a while. Do you use that? I mean, it could be useful. Yeah, I might get into that like later on, especially like after I get a couple of like really good long setups in my tool belt, and I'm looking to like start organizing short setups. I'm probably going to use an inverse chart just to like, help my eyes get used to it, at least initially. Let's see here. And so I hit, so as far as the setup goes, yeah, I hit my support back here, or rather my pullback, and I needed to wait for some price action to play out. So what I told myself, and I don't know if this is like conventional or weird or not, but I decided to draw like a fib within the fib. So this is where it pulled back to the 100, right? And found support. So I decided to make a small fib within that fib. And I hope this isn't too difficult to see. But see where it came back down to support, and it made it kind of did like a double bottom thing at support with these two like bullish wicks, and then it popped up. And I thought to myself, what I'd love to do is draw like another little fib in here to chart kind of a pullback. So I did. I drew a fib right here from this big pop up down to that double bottom. And you see there's the 100, there's the 0. I don't really know that that was necessary, but I just kind of wanted my eyes to see something else, like where a good place to be. Simultaneously, I said to myself, well, if it starts screwing around, I'm down at the bottom of the chart now. If it starts screwing around and it comes back down to the 50 RSI to find some support to go up, then I'll get in. And that's pretty much what I based it off. I drew like the fib within a fib. Again, I don't know if that's like unconventional or ineffective or not, but it occurred to me to do that. And then my ad zone right there, you see where the nice pullback is. lines up right where the 50 touch, where the RSI touched down in the 50, and the MACD was going for the cross as well. So another slide in. So that's how I set up for the trade, and this is how the trade played out. All right, so I took that long entry there after the pullback to the initial fib, and then when it got like a little bit of a nice pullback in the inner fib, with the pullback to the 50 RSI. All right, so it came up here, right? And part of me said, look, just take profits here. My target was the 161 fib that I had drawn from in here. I was like, wow, I really would love to get that. And I was kind of like a little tunnel vision on that. Because seriously, like you'll see what I mean later. I really wanted to take profits right here, but I decided to hold for a while because I wanted that 161. And if I was trading more contracts than one, I probably would have taken some out, but I didn't. And it came back down and it started like, you know, that feeling. It came back down here and I was still holding. Like that really should have been my target, but I was still holding. But I thought to myself, well, this sucks. I'm right back to where I entered and like a little bit lower, but I'm not low enough to get stopped out yet. And because I had my stop set. Um, and like I was like, well, let's just let it do its thing. There's such strong support here. And there's a good chance they'll just keep going up because it was just doing the same price action that I was doing here before. Um, at that point, my indicators look pretty shitty. You see like the RSI is way below the 50. MACD is looking really bearish. So I was kind of like, this sucks. I should have done this there. But there was a nice green volume beat. And the way this stuff was holding with the major moving averages and stuff, I was like, let's just hang on because I still think there's a really good chance. And it wasn't near my stop out yet. So I was like, all right, let's just do this. And so it did come up. And I felt really encouraged when it made this higher low, which was weirdly where my same long entry was actually. And here's the funny fucking thing. Like, sure, it made up to my target eventually, but like when it came up here and pulled back down, I was like, fuck, it's not gonna make the 161. And so I took out profits here, and look where it lines up with the place where I should have taken profits before, thinking that way. So that was really funny to me. Um, I still think it's a good trade. I feel good about it, and I prevailed and everything. I would rather not have dealt with any of this business later on, because this is like a good 6 points right here. And I ended up with like 6.25 points instead of 6. It's crazy. But that was my first trade of the week. That was my first trade on Monday. So it was an adaptation of my initial ideal setup. It's just that it was dumped to a higher low instead of dumped to a new low, you know. That was the first trade, green trade. If anyone has any questions about that, you can type them into the. I don't even have the Zoom chat open.
Hey, LasagnaCat, where was your defined stop loss at?
Let's see here. So it was okay. You see right here where the 200 is. I mean the 666.
Yeah.
So the 666 lined up perfectly with the the 23 fib.
Mhm.
If you look like really close, there was a couple of times where it poked out of it, and I was like okay, so I'll take those one at a time. Like it poked out of it here a little bit,
Mhm. But it never
but
hard open closed.
right, and when this one opened up right on top of there, the 200 EMA, I was like, look, it's got 200 EMA. I can hold on for a couple more seconds.
Yeah.
Which that could be the kiss of death sometimes, but I was like, yeah, but just look at it, and like these huge wicks are back here. And then when it did this again here, I was like, it was still the same thinking. It was like, all right, it did close outside my stop, but it's right here on the 200 EMA.
Mhm.
I was like, let me give the next candle a couple more seconds. And like the thing that I really, really don't like about that is that's an area where an objective rule becomes a subjective rule,
Yeah.
Um, and what is the definition of a hard open close? Is that just when something definitely closes below it, or does there need to be something
Yeah.
opening and closing below it?
It closed below it and it opens below it. But
Right.
it's like a catch 22 because if it opens below it and then it squeezes up like it did right here on this big green candle,
Yeah.
um, you're gonna get shook out. That's
Right.
what I was gonna ask. Would you have adjusted your stop to break below the 200?
It's funny, like,
Because you would have been like maybe 4 or 5 points.
but
Yeah, like
it's
five
worth
points.
it. Right. And that's the thing, like, I actually have a hard time like really like knowing where I stand with that because this I love having a hard stop loss rule, but the way that we structure our trades and the way that we look at the market and know how the market manipulates and the way it, and price action being what it is, it's it's really difficult to say one way or the other. Do you know what I mean? Like
Yeah.
it's like I actually really don't know.
Well, usually, sometimes what I do, like because usually if I'm using the fib play, right, my stop loss is 23% fib.
Hmm.
But sometimes, let's say that yellow line was a daily level,
Yeah.
right, and it was below your 23%, which it may have been here. It looks
They
like
were
it's
like,
right on it.
yeah, they're right. They're at the same level.
um, you may want to adjust it to that because I've noticed, like, even Brandon, he'll say, "Oh yeah, if it breaks below this anchor, I'm out."
Yeah,
And as soon as it breaks, he gets he gets out. He gets out.
yeah,
So maybe even like maybe initially use the 23 as your stop out, but then,
right.
like, because sometimes you're in the heat of the moment, right? You're like, I got my buy, I got my entry, I got my target, and then you're like, okay, like, where should I put my stop?
Yeah,
I think you should always use your stop as a hard line, your the 23, and then if it doesn't come down to it that fast, you have time to reevaluate your stop loss. You know what
yeah,
I'm saying?
true.
If the trade is not that quick, sometimes
Yeah,
you're in and out quick. But if you do have time, maybe evaluate it. It'll be like, okay, the 23% is right here, but we also have the 200 moving average, or the moving averages are crossing over. If I see the
right.
cross, then I'm getting out, or whatever catalyst you use, or
Yeah,
support.
because like with respect to that, like I did have a lot of time to like think this through and kind of evaluate it. And what I kept saying to myself was like, well, let's look to the left. Let's see how it was reacting here. This is like this squeezed up here. It was like sort of like, part of the squeeze, you know, what you call it, price action to sort of smash
Yeah.
through up here, smash through where all these wicks are. You got wicks, and like so with this trade and the way it played out, and I'm glad it was a winner, and I think there's like a good reason that it was a winner. But like on this one, like I really don't feel bad about having waited a couple, to see what happened, a couple seconds.
Yeah.
There is another trade I took this week that like I waited too long and I paid the price. Um and
Well, this screenshot right here paints a perfect picture of where the buyers are, and you can see because of the squeezes right here,
yeah,
right here, right here, and then ultimately right here. So the buyers were right there the whole time, and
yeah,
then they were just getting stronger and stronger, and you can tell by the move because, and this plays to the moving average point. Um, we won't get too deep into it because we'll discuss it a little bit later. But you see how the price action was away from the moving average,
yeah,
but with this push up, it's pulled up this moving average a little bit, right? So it pulled
yeah,
it up, and then what's it got to do is it's got to come back down to make it easier to pull it back up,
right,
and you can see it doing because there's nobody there, and then the wicks are all right here, right?
yeah,
So then what's it have to do to pull it up again? It has to bounce up, bounce up again, and next thing you know, all the bodies right there. So that's strong support. That's like the support is getting stronger,
right,
and you can tell by the move. that it was a strong one, and it was
Yeah.
just getting stronger and stronger, and it
Yeah.
was pulling up the moving average to make it cross over a different moving average. Like I think I don't know, I can't really tell the crosses right there, but we'll get into it deeper. At what I mean that price action kind of pulls up the moving average to make
Yeah.
it cross, or sometimes it pulls it down to make the to when Brandon says the moving averages are catching up. That means that price action's pulling down the slowest moving average and it's pulling up the faster
Mhm.
moving averages.
Yeah.
And I'll show screenshots in a little bit later, but
That's awesome.
good
And
trade.
that, thank you. Oh, and how much time do you want me to like how much time do you want for the moving average lesson and questions and answers? Because
Just
I'll
keep going. It shouldn't take too long.
all right, cool. Oh yeah, so that was that first one. Oh, and I got one question for you. Like, what do you think? Like, do you see how I drew this nested fib after the initial fib? Did you catch that part?
Yeah, yeah, that could be a different way to get in, especially if the levels line up with your longer time frame fib.
Yeah, yeah.
It's like
Which I
double stacking it. But
yeah,
like permanent wave said that he's in analysis paralysis hell.
right,
Um, and I've been there where you're trying to stack up all this catalyst, and you're trying to make sure you have the catalyst stack,
right.
but you're like reaching, you're like forcing the move
Yeah,
instead of like choose your three indicators. And I've bounced around with indicators, and I think I've finally found my golden two, which is the RSI and the MACD.
yeah.
Um,
Yeah. Well, it's funny. It's like when I drew this fib, I drew it with the RSI in mind because I was like, I know I want to see some more price action. And what I'd love to see is like, I kind of asked for what I wanted and they just kind of gave it to me. I was like, I want a new higher low and I want it to get me to the RSI 50 pullback. And I thought maybe the best way to do that would be to draw a nested fib and see if it respect that ad zone. And it gave me what I wanted. It also gave me this little red volume here, but I decided not to pay attention to that. But it
yeah,
was, yeah, it worked out.
but that red volume is the pullback. You know what I'm saying? The pullback that you wanted.
Oh, true. Yeah.
Know what I'm saying?
Yeah.
And if drawing a fib within the fib helps you identify that a little better, then for all means use it.
Yeah.
But just be aware that it could get confusing if you're
Definitely.
overlapping stuff. Like I said, you want the indicators to kind of complement themselves. Like, um, like the RSI, the RSI gets across, and then the MACD gets across, and then the TTM,
Yeah.
it gets a gray bar. So they complement each other.
Sure. Yeah,
Uh,
definitely. Yeah, and every time you throw a fib on the screen, you're throwing like 7, 8 new lines on the screen.
yeah, exactly. So you can get overwhelmed, especially a new trader.
Yeah.
Um, so if you're not experienced, don't try to use it until you fully understand it.
Yeah, absolutely. Like if you're new and you're new to using fibs, like yeah, just like, get used to drawing a fib and watching price action interact with it and watch how the people here have been doing it for a while have been doing it. Um,
Yeah.
and fibs become pretty straightforward after a while.
Um, and one last thing, where you enter was great, and then where you could have exited, um, the thing that would have helped me, okay, get out right here. You're like, why didn't I get out right here?
Right.
You should have looked at the Bollinger Band,
Mm-hmm.
and that Bollinger Band lined up with your fib level.
Yeah. Yeah, totally. Yeah,
So
because that was
that's stronger resistance there.
yeah. And I had them both up there because like this blue line is the 200 from that initial fib.
Hmm.
And it would have been plain enough to see. It was, the louder voice was the one saying, this is a great target, take it. But the nagging voice was the one going, you deserve more, like, or
Yeah.
something like,
Yeah,
like,
yeah, I understand that
yeah,
move though. It was 5 points. That's that's either $25, with one contract,
Yeah,
or 250 with ES contract.
yeah, for sure.
Um, but yeah, just try to keep an eye when your indicators line up with other indicators or other levels,
Yeah,
because that might help you. Okay, I'll lock in 75% here and let the rest ride, whatever.
yeah, for sure.
Um, but just because this has happened a lot where they stack up and you don't get out, and next thing you know, it's going over here somewhere.
Yeah, absolutely.
But definitely, if new traders are using stop losses, um, we'll probably jump into that lesson next week. There's different ways to create your stop loss, and it all depends on your risk tolerance, your habits, or what you can take. And like I said, sometimes you just if you're unsure of a trade, sometimes it might be better just to get out of the trade until you're really certain that you're gonna have a good entry and a good exit.
Yeah, there was an instance or two this week when I was definitely in that that situation. One of those I can share later. Um, we got a couple questions. Easy win. Is your strategy based on 1 minute time frame? And yes, it is, but I often check the 5 minute and sometimes the 30 minute as well. Would you also trade it on different time frames? I mean, it would always be based primarily on the 1 minute. But I imagine it could be just as good on a 5 minute. And I'm basing a lot of support and resistance off of, a lot more on 5 minute and 30 minute. um and, the more I get used to it and the more I learn about moving averages, I've realized this week through Brandon and Semper that the moving averages on other time frames are always like a good idea to keep an eye on those, and plan accordingly. And then Permanent Waves says my favorite fib play is the 161 pullback to the 100. Draw a lot of fibs in weekly, daily, and intraday charts. Color code them. Like to look for overlaps, but it can get to be too much. Yeah,
I
absolutely.
think what he's saying is like you know how Brandon colors his weekly fib teal or something blue,
Yeah, for
and then
sure.
the daily a different color, and then the intraday a different color, just so
Yeah.
you can identify. Because it is a good way to identify weekly. I mean, honestly, if you don't use trend lines, like if you don't want to use trend lines, you can use the weekly and the daily as your trend lines.
The
Um,
weekly and daily fib.
yeah, yeah. Instead of manually drawing out like dojis and gaps and
Yeah.
split candles, you don't have to use that. You can use the hidden fib method, which is just the weekly fib level, and then I guess you could do the daily level within that, and then do the intros in between that.
Yeah.
Um, just if you're not that experienced with trend levels and you're like, well, how do I draw a trend level? You know,
I I started looking at the hidden fib supports, and they're like this week, and they're really useful.
they are, they
They're
are.
really useful. I mean, I sat down to my computer like kind of after the opportunity played out, but I charted a hidden fib right around where like that nice pre-market play that you got today was, and there was a really good hidden play, hidden fib entry there. So, Oh, Permanent Wave says only problem with 161 to 100 pullback is you will get smashed on force up or force downs. No, it's the actually this one here that I did today was one of those ones where it doesn't make it up to the 161 and comes down to the 100. But
Hmm.
like, I don't know. I don't know. We'll see how it goes. I still entered too high. But this one's from the second one from Monday, and this is like it dumped to a new low. So I like looking for these, like the ones that dump to a new low. Like that's how I started looking at this type of setup in the first place.
I
Um,
I think that's what kind of waves is just talking about, where you can get smashed the failed 161 pullback.
right, yeah, like right here, because this one didn't make it to the 161. Like, okay, I drew my fib from here. this red rejection lined up perfectly with the 666 daily as well as the 200 I'm sorry, not the daily, the 666 intra as well as
Hmm.
the 200 intra has a great place to draw the fib down to the base. And then here we go. I was looking for higher lows and there are tons of them right there. Um, let's see. Oh, my RSI isn't showing it here, but it was like overcooled area and stuff. Like it was a good RSI read. MACD closing in. Um, okay. Wave says lots of manipulation lately, so that play has not been as obvious to me. Yeah, I mean, like with this one here, I was just like, well, it didn't make it to the 100, so this would be a potentially good pullback. And it did this one thing. I mess this up sometimes when RSI peaks above the 50 and comes back down real quick. It's not like a true RSI is above the 50, then comes back down. It's sort of like a little peekaboo. And I'm saying to myself, well, I guess that counts as a, pullback to the 50, but it's really just a little peekaboo. And I don't really like, and it doesn't really amount to actual support. I don't have anything definitive to say about that, but I just noticed that sometimes I get faked out by these, even though MACD looked good. Um, it didn't end up costing me anything because my stop would have been like, underneath my ad zone here. This mint color and peach color are like my ad zone. Um, it's funny. I mean, this is like it's behaving more like a 100 down to 61 is what it's behaving like, kind of. But be that as it may, I got in here because everything looked pretty good. And after the first high or low, I sometimes start looking at TTM, and TTM looked like it might squeeze as well. I see I had to hold through a little bit of shit here, but I was pretty far from being stopped out, which would have been here. So I thought let's just stay in. MACD still looked good as far as I could tell. RSI, I didn't have any definitive relationship with RSI at that point, except for hope for the best. Um, but then it started coming up, and when RSI was above here again, while we were getting that pop, I was like, all right, this could amount to something. And it looked good by the time it was up here. When it was holding the 666, I thought, all right, we're home free. And so here's my 161. Like that could have been a target, like fine. I wanted the 200, but this candle right here was literally the minute that I needed to leave and go to my other job. And actually, during all this price action here, I was like running in and out of the room to like, all right, where's my keys? Come back to the computer. All right, let me get my smoothie. Like, let me come back to the computer. Like, did I pack my this or that? Like, this is all me getting ready for work and like coming back to the computer and looking. But it played out like this is a really good play out of my ideal setup. I wish, not wish, but I'm going to ideally get a better entry. This is just a better entry. And, you know, maybe if it doesn't make it to the 161, maybe I'll treat it more like 100 rejection and wait for the ad zone. I don't know, Semper, do you happen to notice like when it shies the 161, do you hope for it or do you look for it to find support at 100 or down in your like initial ad zone?
It depends, cause like I said, the moving average kind of complements the fib.
Yeah.
What's this moving average right here?
Yeah, so right there, so this one here is the 21.
And then this white one is the 50.
That white one up there is VWAP. This dotted purple one, dash purple one, that's the 200 EMA. Um, the one where it catches support over here is the 200 SMA up here. It finally catches support there.
And then where's your 666? Is
This
that
is the
this one?
666 right here. Yeah, so when it touched back down here, the 666. That's like when it did this and started making price action, that's when I really started to feel like good about it. And then the push came.
That's your VWAP. This is your 21, and then what's this one? The 200?
This one right here is the 200 SMA.
Oh, right here's your 200.
And this one that you just highlighted, that's the 50 EMA.
Where's your 100?
Varied. Oh, it's up here. This one, this guy.
This one.
Yeah, so moving averages were like a bit jumbled, I thought. Easy win. How many trades are you taking on a daily basis with your strategy? So it's usually between 1 and 3. Um, Yesterday I saw some really nice setups and I took more than usual, and I caught 3 really great plays yesterday. And then I had also yesterday I had one red, which was significant. Um, and then one red, which was like only red by like a quarter of a point, which I'm actually really proud of, which I want to go over. But yeah, like it's usually 1 to 3. But yesterday I spotted so many good setups.
So so that this white one's the VWAP then, huh? You said?
The dash one, yeah,
Yeah. As you see price action, especially because you got in kind of in the middle. Um, because I thought that was you said the 200s right here too, though, huh?
let's see. This is the 200. That's the 200 EMA.
The 200 EMA.
Yeah.
Yeah.
I mean, it's a real traffic jam because when you look at the stacking, it's like 200, 150, but they're all closing in and they kind of abruptly all cross over here. It's a weird show. I mean, to simplify, it could just be like the 666 is the over under in this situation. I don't know.
Yeah. I wish what day was that? Because you kind of want to use, because you said that you don't know about this 50, right? So you're like with the RSI, you should either be getting in down here or above the line,
Yeah.
right? But when it gets in above the line, like you should have got in right there. If you look up, you could have got in right there, right?
Say entry. Yeah.
Because it went up and it came down.
Yeah.
Uh, you don't want to catch. I mean, that's this is not the greatest entry, but with your fib level, it is.
Yeah. Yeah. Right there.
Um, so right here, you would have kind of got confused because the MACD is bullish, RSI is kind of mixed, TTM is bullish, volume is mixed, but you do have a, it's like it's reversing.
Hmm.
Um, yeah, when you're gonna use RSI, look at where price action is, and if it's coming up to a moving average, VWAP, or whatever, be cautious. You want to be okay. This it might reject the RSI 50
Yeah.
because
Yeah.
sometimes you'll see it go above it, right? And then if it starts pointing down, then you want to kind of stay away from it until you want to see something slow. And remember, this week Brandon says you want to keep an eye on the speed
Yeah.
of the RSI or the MACD or whatever it is. So right here, it was fast. You can tell it was fast because it went almost straight up.
Yeah.
And look, it went almost straight up. You don't want to get in when it's you do, but you don't. And I recommend new traders get in when it's slower, like right here where you can actually say, okay, it's up, it's in an uptrend. We got uptrend. We got MACD that's bullish. Green volumes coming in. All right here, it's all green volume. For a newer trader that has somewhat of experience, you could get in when it's fast, but you gotta use your price action skills or fib or whatever indicator you use. Um, but yeah, when you're um, when it's coming up to an indicator resistance or moving average, whatever, keep an eye on this. As that might be your signal to get out, or it could be your signal to be okay. It might be resistance. Um, but yeah, good trade. Easy's asked, did you notice if your strategy works better in the morning or afternoon?
Oh well, I usually, because of my work schedule, I'm usually done trading by noon. I wish that like I could trade longer than that, and on some days of the week, like once or twice a week, I can. But I'm usually done by noon, and yeah, I mean, it shows up provided that there's some kind of like dump in price action or like some really big drawback. Like anytime like there's that, I begin looking for the setup, and so like what, whether that be like 9:30 a.m., not 9:30, whether it's like 10 a.m. or like I'm on the East Coast, by the way, Eastern time. So whether the setup happens at 10 a.m. or whether it happens like closer to 12, it seems to work as well, like within that time frame, like really well. And I have used it later in the day on the occasion that I can, and I've noticed it does well then as well. I wish that I had been able, like, in my trading, career to like be able to watch price action, like, be in front of the computer like more hours a day, but the work schedule has always taken me away from it like more more than I would have hoped. Um but yeah, like if you're able to watch, throughout the day, yeah, watch for the setup and just like, draw some notes about it and see how it goes. I'd be curious to see how well it works later on the day as well. So yeah, man, like I would definitely love to find out too. My assumption is that yeah, because it seems like fairly it's because it's recognizable, I'm just into looking for stuff that's recognizable. So
It
like,
is. It sure is. My setups I can play, or the best times that I play my setups are in the morning, pre-market, uh, by 5:30 a.m., which is Pacific Standard Time. From 5:30 to like maybe 7:30, 8 at the most, 8 a.m. And then again it starts back up around 10:30 Pacific Standard Time, and it can go all the way to power hour. I'm not like actively looking at in the morning. I am in the pre-market in the morning. I am from 10:30. I'm not actively looking at the screen. I'm like working and checking on it. And then around 11, because at 10:30 I try to look at price action to see if it's setting up for power hour, where it's whether I think it's gonna dump or whether I think it's gonna pop. And by 10:30 Pacific Standard Time, you should be able to get a hint of okay, because usually what happens is price action if it in the morning it runs up, power hour, or if in the morning it runs up by 8:30 it'll dump down to around like 10:30, 11, and then it'll start to set up for a pop or inverse if it's short day. Um, but if you're barely starting out and you have one setup, I recommend trading it after hours, um, right after it opens, as there's always a play. Usually the play for that is a half candle retrace play, and one of the only rules that we use for that is if price action opens up in inside the previous day close. Uh, then it has a good chance, a good probability of it going down to the 50% fib level. Um, um, but it's only if it sets up, of course. But definitely practice your setups um, after hours, especially if you're new or if you're introducing a new tool to it. Try it out after hours. Price action is really slow. You can walk yourself through, and I would sim trade it first just to make sure you don't want to put real money on the line until you know that you've back tested that setup yourself. Uh, because your eyes might pick up something that my eyes will not. And if you're used to that setup, then you already trained your eyes for that setup. Um, but yeah, good question. Wave says you can draw trend lines on the RSI and look for higher lows and do it on the MACD as well. I do that time to time too. Um, 709 is working on a RSI indicator that does it automatically for you, where it'll draw the trend line. So, but it'll only draw it when there's a RSI divergence, because RSI divergence is really, really strong. And if you, especially if it's in the overheat or overcool and it's creating divergence, a play is coming. A play is cooking up for sure. So thanks for the input, Waves. Cool. Go
All right,
on.
absolutely. And so, and just so folks know, this move went up like a lot more after that. And and just as a reminder, uh, like this is what my, the example I showed you at the beginning, this is like the ideal setup. So if you look at that price action with the higher lows and stuff after the big dump, and then those fib targets, that's looking a lot like that one that I just showed you. This is the one I just showed you. This is the example. So that's what this is all about: finding something recognizable, replicable, something you can do over and over again, something that you can make rules for to tailor it to like your own needs. Um, and that's what's up. So the next day was Tuesday, and that was the big dump day, when I shouldn't have traded, but I do have a red trade to share from that. I also, what was I gonna say? I also have an after hours trade that I did, which is exactly the play that Semper just said. And I did one, and it was 10 points. Like I let it run overnight, and it was a 10-point win. But first, here's a little boneheaded red. So you shouldn't be like like trading on like a dump day, but this was actually before the dump happened. Like this was the initial dump out the gates, but it was before. um Oh, Permanent Wave said, love it. Got to find your trade, make it repeatable. And that's just it. Like that's why I keep that screenshot of like that ideal example. So I have something to like compare it to, so I have like a template of it. Not that I expect the market to conform to what I want, but it needs to be recognizable. And it needs to like, you need to form your questions in the form of rules, like rule-based questions, so that you can ask yourself, is the market showing me what I need to see to do my replicable setup? Am I seeing what's familiar? Is this recognizable to me? Does this look replicable to me? And have that like template, um, have that setup. Um, so this is one where this is one where I was sort of, I don't know, I was bugging. I think I just wanted to like get whatever, like the day before I had two like wins, and so I probably felt a little high or something. So here's the initial dump out of the gate, and this is before it dumped all the way down. Like this is kind of when it was just deciding what it wanted to do. But I was being a smart aleck, and I thought that I'd identified some strong support on the SPY, which there was. But at the same time, I tried to convince myself that this was the setup. Like, it's like I tried to tell myself, like, hey, here's the higher low, which means that, or like, this is a great looking red pullback. That means I can just get in. And like, there were various reasons why it kind of looked okay, which was like, RSI had gone down to overcooled and then like was on its way back up. MACD didn't look too bad, but here's where I was kidding myself though. And, part of this is learning how I can catch myself doing stuff, is that, it was really too early in the morning. Like this kind of wiki price action is bad anyway, but when it's happening on like in the first 10 candles, and you're trying to identify, like, and I'm trying to identify that setup that I just showed you, like look at how far this is from that ideal setup that I showed you. That one slide that shows it real well, this looks nothing like it. Like, all right, this is kind of a higher low, but why would I get in here? It just doesn't make sense. And like, sure, this is a red pullback, but it hasn't shown me like the true play out of a higher low. It's like, okay, sure, if this was a higher low and there was another one like bing, like up here, like fine, but that just wasn't the case. And I got in very early, and it went down here. um there's really, if someone could tell me like a good reason to be in this trade, I'd be interested in hearing it. I guess maybe I was encouraged by this. You know what? I was probably seduced by all this green volume here. You
Hey,
know, yeah.
hey, LasagnaCat, don't beat yourself up, dude. I know that I almost entered in the exact same spot, but I entered at the bottom of the red candle where you entered.
Oh,
'Cause
really?
I had a fishing order right here at the 38.
Yeah.
Um, the reasons why I got in is I saw the higher low right here, and
Hmm.
Wave said, it's divergence, right? Because it's coming down, and
Yeah.
it's still coming down, but our side's creating higher lows.
Right.
Um, not sure where MACD is, but I got in right here, and this is something that we talked about offline, where we're like, you're still getting confused because you have your plan, and
Hmm.
then either Brandon or Connor's contradicting your plan.
Yeah.
And it can get confusing because you're like, well, am I right? Is Brandon right? Or is Connor right?
Right.
And this day, it was just one of those days that was unordinary. It's not an ordinary day. It dumped.
Yeah.
It surprised everybody pretty much.
Yeah.
Um, the way that I kind of try to do, try to kind of ignore. I don't ignore Brandon or Connor,
Right.
but I stick to my plan
Hmm.
until until my trade is not going it the way that I wanted it to go.
Yeah.
That being said, Brandon saved my ass on this trade because I got in right here, and I could have got out with the profit at the 100 right here or
Right.
right here. And he said something, or he said I'm entering short, and it wasn't hitting the levels that I wanted. And I was like, well, what is he seeing that I am not?
Yeah.
And something that he said a few months ago or maybe a month ago is you'll see the candles get big and then they get small and then the big move comes.
Right.
And I
Yeah.
started seeing these small candles. I was like, oh, that's what he's seeing right here, because he's seen this,
Yep.
and then I was like, oh shoot, he is right. And I got out like just in the nick of time before it dumped. I got out with like 2 points. Um, and he saved my ass, but I was sticking to my plan until either he talked some sense into me or I seen something else.
Right.
And I believe at that time the MACD was going bearish as well too, and it was because I even said in the chat the MACD was almost like pointed straight down that day. It was like almost a straight down arrow like that, and I've never seen the MACD straight down.
Right. Right. Yeah.
Uh,
That really was crazy. That was, yeah, it was like a straight line.
but that goes to all the new traders. Come up with your own thesis. Stick to it until you say the trade's not going your way. So I entered here right at the bottom right here. I seen it go down. I didn't get stopped out because the Bollinger Band was here, and I seen this. And I was like, okay, it created a higher high. It created a higher low where I wanted it, right at the 30, and I seen it go up. I was like, okay, it's gonna go my way. And then right when it hit this moving average right here, he's like, oh yeah, it's holding it down. And I was like, shoot. And then I seen this one, and this candle came up quick. So I just did buy the ask. I usually never do buy the ask.
Yeah.
Um, and it got me out right here at the right above the 61%.
Yeah. Well, you know what's funny? Like you actually almost saved my ass on this trade, because it was during last week's meeting where like I had gotten a red where price action had like tested a level, third time test level flush, and you were like, well, if it tests a level three times and doesn't make it up, it's probably going to go down. And so I was right around here. I was like, oh, what about what Semper said the other day? And I was like, wow, it's kind of, it was up here after like a little dip. It like tried to come up here, but didn't. Tried to come up here, didn't. And I was like, what if it tries it again? And like on this candle, right, it popped up and it slammed right back down. And I was like, oh shit, what if this is the third rejection? I was like, I should probably get out right here. I swear to God, I said that. And that would have been just like 25 cents, whatever, or like
Mhm.
quarter of a point. But I was like, nah, let's stay in, let's stay in. My stop isn't until down here. But then if I had listened to that voice, I would have gotten out.
Yeah.
And there's a trade that I took, like I think the next day where I was in the same situation and it happened and I did get out. And it was for only a quarter of a point.
Yeah.
Um,
Usually it tests it 2 to 3 times. If it gets rejected the second time, it's probably gonna go back up and test it again.
yeah.
That third time, it has a higher chance of going up. But the thing that kind of helps you guide you through that process is, are the moving averages getting pulled down so price action can bust through it faster?
Hmm.
And right here, that right there is still pointing down. This pop, if it would have tagged it, it probably would have flattened out a little bit.
Hmm.
And that's what you kind of got to see is, okay, is it going to flatten out? Is the pop going to flatten out the moving average for it to catch up, or is it going to continue pointing down or
Right.
shy it? And that's what it did that day, was it was just pulling all everything down.
Yeah. Yeah. Cool. Um, well, we only have like a half hour left on, how much time do we left on the recording?
About 34 minutes.
34 minutes. Because we're only on Tuesday with my recaps. I do have an after hours trade from this day, but
Yeah, go
should,
ahead, share it.
okay. I could also skip ahead to when I use the moving averages or
Yeah, do that.
all right, cool. All right, I'll go to the next day then. Um, so I'm not gonna share my after hours trade, but it was really nice. It was a 10 pointer. It was kind of like I had tried them a couple times, but it's more important to get into this moving average stuff. It's a little bit more relevant to what we're looking at today. Whoop. All right, so it's the third, right? Yeah. All right. So on the next day, Wednesday, I had a I had a nice green trade earlier in the day, but during that pre-market, I'd asked Brandon a couple questions about moving averages and how he uses them as targets and stuff. And the week prior, Semper, was saying, hey, we're gonna get you doing moving averages this week as well. And I was like, oh, all right. And and he told me a great, I was all for it because like I've somehow not educated myself too much on moving averages. So when Semper said it's time to get into moving averages, I was like really excited. Because I really want to get this, under my belt. And so what both he and Brandon were talking about were after a dump, and there was a dump back here, um, price action getting strength, getting support on the 50 SMA. That's my 50 there. And then coming up, and it's like, um, Semper, you might want to chime in if I'm getting any of it wrong, but like what I was looking for was like for price action to like hit its head on the 50, on the 100 rather. This is my 100 EMA, then come back down on the 50 SMA for support. Semper was mentioning that like the fib play and the moving average play can be used like in conjunction with one another, or sort of um that they relate to one another. Like, so for example, I was attempting to do my usual setup, which would be, you know, this new low, draw a fib down from it, right? Like where it hits the first high, the first red pullback, which is on the 50 EMA, nice red pullback. So that was my 100. I pulled it back here at the bottom and got great higher lows here. And so like normally like what I would do is like, wow, if I, see this dip down here and see this little like sort of doji thing come down here, I would maybe try to get in on this candle. Um, I think what might have been happening though was that like I was feeling hesitant because this grouping of higher lows like maybe looked a little strange to me. I don't know. But sure enough, like, and I wasn't taking this trade actually. I was just kind of watching it. I was wanting to do it here, but then it popped out. And so I was like, ah, fuck, like, it's out of my ad zone. It's out of my fib zone. That trade's off limits for me today. Like I was hoping to get in on this trade actually, but it still looked a little unfamiliar to me. That's what I'm saying. It still looked a little unfamiliar to me. But Semper said that like if a fib play busts out of your fib zone, you can maybe start looking for it to turn into a moving average play. And as soon as I saw this bust up, even though I felt a little bitter, I was like, well, like Semper's voice immediately came in my head. It was like, all right, let me look if I can see if this becomes a moving average play. Um, and I was like, well, what I hope it will do is hit its head on the 100 and come back down to 50 for support. Like that's the conversation I had with myself. And it did exactly that. So I was like, holy shit, this might be exactly what Semper was talking about. And I was like, wow, okay, it held one with a nice wick. Like, oh shit, it held two with a nice wick. And I was like, man, I'll bet this would be a great place to get in. And look at that, the RSI was just like hanging out on the 50. I was like, holy shit, this has got to be exactly what he was saying. And then like, boom, like I didn't get in here. The arrows are there, but this was just me watching. I was looking for like a fib play, but then when this all happened, it was just simply me thinking about the play out that Semper was telling me about the prior week. And then yeah, and then boom, it once it got that support at 50, I was like, holy shit, if this is it. And then bam, right up. Really nice looking price action too. Like what nice price action. Like boom, doing very nice. Couple little consolidation guys here. This would have been my target, 200 SMA. And look at that, 666 SMA for a second target. And that's the 1618 fib and the 200 fib. I mean, that's picture perfect.
It,
And it's also I don't know, it's real good. Did any of that sound right, or how'd that sound, Semper?
yeah, you did good, man.
Yeah,
Like you said, picture perfect. What you want to see is a hold of the 50 RSI and hold of the 50 SMA. It's perfect. But this is a good moving average lesson because sometimes price action will just bust through the 21, bust through the 50, and go straight for the 100. Um, if it does that, it's gonna come back down to the 50 and then go back up to try to bust through the 100, either shy the 200 or hit the 200, come back to the 100, and then go back up to smash through the 200. If it smashes through the 200, it's gonna most likely hit the 666 or shy away from it, come back down, hit the 200 to gain some momentum, and then go back up and smash through the 666. Even though that's not the 200, but you guys get what I'm saying. Um, in the previous screenshot, remember I said that the SMA should have flattened out with that pop.
yeah.
Um, in this pop, it does flatten it out. See this pop right here? Look
Hmm.
at the moving average. It was down, 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 and then it starts to flatten out right there. That's one signal that you know for sure that price action is going to pull down that moving average to mount it.
Ah, okay.
So it flattens out right there, right?
Yeah.
Look, it hits it. Boom. What's it need now? It needs a pullback to pull it down a little bit more. Pull it down,
Hmm.
and then next thing you know, it's remount it and hit the next moving average.
Right.
And then it hits the 100, I think.
Yeah, it's 100.
Hits the 100, comes back down. What's the next step? Come back down to the 50.
Yep.
And then look it. The 100 was coming down, and then this pop right here flattens it out right here.
Yeah. Yeah.
Um, and then what's it gonna do when you see it flatten out? Come down to the 50, and then go back up. Now, what's this pop do? This pop flattened out the, what is that?
200 EMA.
Yeah, so it flattens that out. Because the way it works is it flattens out the fastest moving average first, and
Hmm.
then it flattens out the longer time frames. If you use the 21, if you use the 21 moving average or the 20-day moving average or whatever, it's gonna smash through the 20. If it smashes through the 20, where is it going? The 50, and then it's gonna flatten that one out, right? Come back down. Where's it going next? Next level is the 100. Once it gets to the 100, what's the next level? The 200. And you just, it's stair stepping. You see it stair stepping. Sometimes, of course, it won't work, but most of the time, I'm pretty when you see it, especially when you see all the moving averages stack up in order. So you have the 666, and then you have the 200 right here, and then you have the 100, and then you have the 50, and then let's just say you got the 10.
Hmm.
Um, you'll see the faster moving average is dropping almost straight down, right?
Yeah.
And that's what I always, when I first started with the moving average lesson, it kind of looks like an inverted wave, like a
Hmm.
tsunami's coming. You know when a tsunami and the waves start to build up, you see it building up right here. It's kind of upside down, but you see it building up, and then it sucks everything up.
Yeah.
And you'll see the moving averages start to uh to flatten out. Like I said, the pullbacks. You need a how do you explain it? Like mash price action with the moving averages, because price action is manipulating those moving averages.
Yeah.
But they do complement each other.
Yeah. No, that's sick. Like watching like the pulling to the flattening out, the pulling to the flattening out. It pulls it down and it flattens it out.
hmm And that's what you got to see. Like, okay, it lines up with my 50 RSI, or it
Yep.
lines up with my MACD, and that's like, okay, so you're right here, right? You're in the bottom zone. You're right here. You see it go down. Next thing you know, you bust through here. Okay, what do you want to see? You want to see hold the 50 RSI and hold the 50.
Yep.
And if it goes up, sometimes you'll see the manipulation where the RSI is just like this, just like shine the overheat, come back down, and then shine the overheat.
Hmm.
Where that's where you gotta try to find, okay, what is it aiming for? What is it aiming for? Well, let's check it out. Let's just jump into uh, the moving average lesson. So I believe another member. I believe it was easy. He's like, oh, maybe a pop off the 200. And sometimes this is good, right? Because you kind of want to see it slow. You want to see small, slow candles like this. When you start seeing full body candles, like let's say this red candle is not there. If you see two full bodies come into it, you may want to not put a fishing order out, and they may slow you down. When I put fishing orders out, um, especially after the day, I think this day it had ran up a lot. If it runs up a lot, it needs a relax. It needs a relax, especially after a big body candle up or a big body candle down. If it's a big body candle down, then it needs a relax up.
Oh, Semper, do you want to share your screen?
Oh shoot. Yeah. Um, uh, so on this day, I believe one of the traders asked, "Well, do you see a bounce off the 600?" I didn't answer. What you want to see is you want to see it hit and a hold. You don't want to see it smash through. Um, If it smashes through, especially if it smashes through the 200 or the 666. If it smashes through the 666, then you may start to see trend changing because this was the top and it had ran up all day. It's cresting, so it's cresting down. So when it smashes through the level, what is it gonna do? It's gonna pull, especially when it smashes through the 666. What's price action gonna do? It's going to pull down all the moving averages down. The first thing you see with a moving average, especially when they were all up on top, I'm sorry I didn't get one before this, but I should have, is one of the things that I see, one of the first things that I see is the 9 cross the 21. That is not a confirmation that the trend's going to change. That's just, hey, a 9 crossing the 21, there's going to be a pullback. Um, the next crossover that I see that's a little bit stronger is a 50-50 cross. And it'll give you the 50-50 cross right here. You see the 50 EMA, the solid yellow line is a 50 EMA. And when you see a cross, the faster moving average below the slower moving average, then there's going to be a pullback or it's going to change direction. But me, what I see is the 921 cross and then the 50-50 cross. And then the other cross that I use is the 50 SMA over the 50 EMA, which you get right here. So you get the 50-50 cross right there, the 50-100 cross right here. And this is not elite system. This is just something that I came up with. Brandon said the 921 crossover a long time ago, so I started messing around with moving average crossovers, and this is just something that I gravitated to. Um, so that's another cross. The ultimate cross that I would use, the golden cross, is the 50-100. So if you're not using the 50-50 cross or the 921 cross, just pay attention to the 50 SMA crossing down below the 100. So right there, that's already your confirmation down. And I mean, you got it way over here. So you also got to think of RSI. The RSI right here is guiding you, right? Right here. By the time it hits, I use it depends. If you're trading the intraday, if you're scalping, you can use the 50-100. Just the longer time frames are stronger. I'll get into that right now. I'll give you a better answer. Um, so it crosses over, and the golden cross is a 50-100, right? Um, so it's gonna pull down all the price action. What you want to see right here, what I was saying is the another reason why I wouldn't have put a fishing order out here is because you should have seen the RSI in the overcall. When it gets to the 666, you should be right here, but it was like right here. If you notice, um, shoot, where's my annotation? Right at this level, you're like on that candle, and you have a lot of head space or leg space, whatever. You got room to come down. So the RSI is telling you that it's going to come down further than the 666. I kind of relate the two. So I'm telling myself, okay, there's a lot of headroom, a lot of room down. So I don't think it's going to hold the 666. And it doesn't. Um, so after it smashes through price action, if it smashes through the 666, and now it's time for price action to manipulate the moving averages. Um, So now it's gonna. Remember I said um, that I like to see all the moving averages stacked in order. So here's a 200, here's a 100, here's a 50 SMA, 50 EMA, uh, the 21 right here, the 10 SMA, and the 9 EMA. Um, but since the 666 is not up top, now you're already thinking it's going to pull down all these moving averages below the 666. So let's see what happens. Um, let me see. So that was where we left off, and all the moving averages were on top. Look, all the moving averages are slowly starting to pull down, and it's starting to pull them down. With this pullback, it flattens out the 200, and then it pulls it down again with this one, and then it's going to continue pulling down those moving averages. You get the 50-50 cross, and this is where you can use the 50-50 cross for small bounces. Um, but the other time frames kind of tell you the bigger story. And I've noticed that Brandon does this a lot, is where he's jumping from time frame to time frame. And you gotta use the moving averages as well too. Um, so Easy asked the question, what time frame are you using the 50-100 cross? It depends. How long do you want to stay in the trade? Do you want to stay in the trade a few minutes or a few seconds? And sometimes the 5 minute won't have the 50-100 cross. Sometimes it'll be on the 1 minute. You'll see it on the 1 minute. Um, like for instance, let me see. Here's the 50-100 cross right here. But if you look at the one at the 5 minute was crossed way back here at 2:40 in the morning, where the 1 minute is crossed at 9 in the morning. So you kind of gotta use the smaller time frames to tell you where price action is going in the long time frame. So usually what I do is, and I'll just think of it as, okay, I'm trading the 1 minute, right? So like, say right here on the 30, I said it last night. Oh, looks like we're gonna have room once it mounted the 50 right here, and you see the 50-50 cross. See, so you could have caught that pop. I didn't because I forgot to put out my ATM fishing order out. But you see the 50-50 cross right here. That's already, for me, that's bullish. That it's gonna have at least enough steam to make it up to the 100. And then you look back at the 5 minute, and where was this one at? So that was at 2 in the afternoon. So here's 2 in the afternoon. Um, when I seen this right here, I knew it was gonna pop. And then you see how it held this 200? So now I'm looking at the 200. Does the 200 support what I think about the 30 minute? You know what I'm saying? Or is it contradicting? Sometimes it does. Like sometimes the 30 minutes bullish, the 5 minute is bearish. That means that it's going to be bearish for a short amount of time, not a 30-minute time. So I use the 5 minute. Okay, is it confirming Is it confirming what I think is going to happen? So right here, it's already mounted the 200. So me, I'm already thinking, especially right here after you see that bounce. Just remember what I say. The way that I use moving average, I use the same confirmation level that we were taught in the first three lessons. You want to see price action smash through a level, come back and test it. That's your confirmation. Right here, you could have got in right here, but you would have had some drawdown. But the confirmation, you're using it in tandem with other indicators, RSI, MACD. Um, to me, I use it the same way. I'm not sure if Brandon uses it completely the same way he uses the trend line confirmation, but I just applied what I've learned and it's been working for me. Where price action smashes through that level, comes back. But I just don't, I'm not using, I didn't create a subjective rule around that. So if it pulls back to the 200, is it gonna hold the 200? Well, how do you know? You don't know because you have Bollinger Band that's resistance right there, so you don't know. But the longer time frames, if they match up, you can use that as a catalyst. If they're all bullish, it's gonna be a bullish move. Just think about it. You could have entered right here, right when you thought that the 30-minute candle right here, let's just say right here, was bullish. You could have stayed in the trade until like right here. That's almost an hour and a half in the trade. You would have caught close to 35 points. But if you're a scalper and you're a beginner, you're only catching 10 points. But who knows? You might have catched 10 points three times. I've done that a few times where, okay, I know it's bullish, okay. And you always want to keep checking back. Hey, it's bullish. But like I said, you want to see the moving averages. So right now it's pulling up. See how it flattened it out and now it's pulling up the 100. I'm not sure if your guys' is 200 and the 1 minute is really close to or the 30 minute is close to the 666. Um, but once it busted through the 200, where's it going to go? The 666, where's it going to come back? Come back. If it comes back, confirms on the 200, it's going to smash through. Look at what it did. Comes back, they get sandwiched. If the price action gets sandwiched in between the moving averages and it holds that moving average, it's gonna smash through when it goes up to test it. Um, but you want to use the smaller time frames, the longer time frames to confirm the short term trend. So are we bullish? If this candle would have opened up on the 100, we're bullish, right? MACD is bullish. The only thing is RSI is overheat, but right here you could have thought, oh, it's resetting because it easily could have went. When it resets, it would have just came down right here, shied the 50, and then came back up, and then probably not even hit the overheat and just reset. So back to over here. That's the wrong one. That was in the morning. Where am I at? Hold on one sec. So So this is where we left off. What you want to see is, okay, now you're seeing the moving average and you see it closing in. Okay, now you know your thesis is right. It's short. When you start seeing it like this is for you to be like, okay, this is um we might have the half candle retrace in play. So what's it do? It pulls the 200 all the way down. And then right here, look, right here in this little point, you see all the moving averages line up how how I like them to line up. You got the 666, the 200, the 100, the 50 SMA, 50 EMA, the 21, the 10, and the 9. Um, Disregard the 10 and the 9, but you got them how you like them. They're stacked up. When you see them stack up like this, when you see them stack up, now you're looking for a base. Where's the base? Well, let's see RSI. RSI looks like it's perfect basing. It's in the overcool. Next thing you know, you want to see some higher lows. Um, and technically, it's diverging right here because this is going down. This is going up. And you got to kind of train your eyes to catch that. You see it coming down. Sometimes it'll go sideways and RSI is going up. Like it did right here. See how it's sideways? Trend is going up. But usually what I like to see is moving averages stacked up, right? TTM's right there. Volume is so freaking small. I hate that it takes picture like that. But volume, honestly, the last couple of weeks after discovering RSI MACD, that combo, I hardly ever see volume, but there you can still use volume because it shows where there's going to be a squeeze point. Squeeze point is where you see the volume get sucked up. Like for instance, um, we'll take this little screenshot right here. Um, Usually you'll see big bar, big bar, big bar, and then you'll see two little bars, like three times less the amount of the average bars before, and then you see a big squeeze. When you see those little bars, you'll be like, oh shoot, something's coming. And if you line them up, if you line them up with your other catalysts, you'll see a squeeze, and that's what Brandon is seeing when he says we should get a squeeze right here on this candle is because he already identified the volume and TTM and MACD, and he knows what candle development, how it develops. Um, um, so easy as how about exit? Do you profit target or opposite move based on your entry, like EMA cross? Um, that depends if I'm using the fib level or if I'm using the moving average level. Usually I'll use the moving average as a target. Like let's say I get a fib, right? I fib from here to here, but it's like 2 points. But the moving averages stack up how I like them to stack up. And I see a moving average play. And the moving average is 5 points. Then I'll use the moving average as my target. Because that's my average. That's what I'm shooting for. If I'm shooting for 4 to 5 points, I'll use the moving average as a target. If I want to be safe and lock in some profit, then I can use a fib level or a Bollinger Band, the top Bollinger Band as a target. Um, it all depends. And usually, like I said, like let's say I got in right here. I'm not using the fib, and I'm not using. I was gonna say I was not using the moving average, but I have to use the moving average. So let's say I use the Bollinger Band to get in and the RSI right, because got the RSI right here creating higher lows. Got the MACD cross. I entered right here. Got TTM. My target would be the 50 SMA. If I see RSI right here kind of hit its head and come down, I'm gonna be cautious. I'm gonna be cautious around this area because it could smack back down. Um, but that's what I say. I use the RSI as kind of my guide, as if am I getting out or am I holding? MACD still look bullish right there, and we had the Bollinger Band as support. My stop would have been break of the Bollinger Band. Just keep in mind that usually when it breaks the Bollinger Band and it's flat, it's probably gonna bounce. Um, if not, if the Bollinger Band was kind of like pointing down over here, then of course I probably wouldn't use that. Probably would just stopped out. Um, so yeah, use the RSI kind of as like, hey, be cautious around this area. You know what I'm saying? Because look at the 50. It hit his head on the 50 right there, and it's not even near my 50. But you can hold and hold that. Um, so now that the moving averages are lined up, now you want to see a cross. Usually I use a 50-50 cross for a change of direction, including with, combined with Catalyst, with MACD and RSI. So you get the 50-50 cross, hits right there. Usually, if it smashes through the 50 SMA, it's going to hit the 50 EMA and then come back down. Just like we did talk before, if price action gets sandwiched in between, it's gonna go to the next level. Right here, unfortunately, it didn't. It failed. Uh, but the RSI over here coming into almost overheat could have told you, okay, there's still headroom for the 100. There's still headroom for RSI. Should I stay in? Totally up to you. So we're right here now. So I came back down, retested it. This is indecision right here. But you're seeing them. You see how um, the distance between the 200 and the 100 is just getting tighter and tighter and tighter. That's what you want to see when you see this pullback. When you see pullbacks, you want to see the moving averages closing in on each other because that's telling you that it is going to change. It just needs a pullback right here. It needs a pullback to pull down the 200 to make it easier, and you kind of see it flatten out a little bit right here. So it goes down, and then it flattens out. It flattens out with that pullback. So you're asking yourself, I want to see it pull back when you hit right here, when you cross the 50s. You either you tell yourself, I want it to hit the 100 and pull back. Right here, it didn't. You got the pullback before, but you still got the pullback of the 200. If you would have got the pullback right here and seen the moving averages kind of like this one going back down and that one kind of just straightening out like that, then you know that the trend is still going to continue going down. But if you, like I said, the faster moving averages get flattened out first. Look at the 50, flat. What do you want to see next? You want to see the 100 get flat. So you see it get flat right there. What do you want to see next? A pullback, because right here, you don't see the 200 flat, right? You see it coming down. So you see the 100, you see the 100 EMA get flat. You say, okay, either price action is going to hit and pull down or pull down the 200, or it's going to shy and pull back to pull down the 200. The latter happened. So you get the pullback, you see the flatten out. Now you want to see the remount to hit the 100. What do you want to see next? You get sandwiched in between the 100 and the 50. The moving averages are too jumbled up right here for that to happen. Um, so now you just want to keep seeing the 100 close in on the 200, and it gets sandwiched again. RSI, base, base. And then the European markets open. No, they didn't open that time. So now that it hit the 200 and the 200's flattened out, well, you're like, well, why is it dumping? Because there's a big space in between here. That's a lot of work. Price action, there's no way that price action is gonna have enough steam to make it up here. In the 1 minute, that's a big space. So what does price action have to do? It has to pull down the 666 to make it easier for price action to remount the 666. Let's see what happens. So now you see how the 666 was coming down? Now you see the two now you see price action mount the 200. Now you want it to either shy the 666, pull it down, and then on the second way up, it should mount it back up because now you see the 666 flattening out. You see it flatten out. Okay, what happens next? And now what's it doing? It's still pulling down. So now you want to see it smash through the 200, right? Shy away from the 666. Come back down to the 200 and hold it. You want it to hold. And look at you got the Bollinger Band support right there. And you also got VWAP right there too. Um, but you got the Bollinger Band support, and look at it's still pointing down. That's what you want to see it flatten down and then get pulled down again, because these pullbacks right here are pulling it down, and the pops are pulling up. It's like it's pulling up the slower. It's pulling up these moving averages, and it's pulling down this moving average, and that's why they get jumbled because it needs to pull down this one, and it needs to pull up these ones. And then again over here, you get the 50-100 cross. Here's the 50-50. Like I said, you get them in sequence. You get the 50-50 cross, and that's why I use it because it comes way before the 50-100 cross, which is way over here. The 50-50 cross can get you in earlier than the 100 in the golden cross, the 50-100 cross. Just keep in mind that the 50-50 cross is not as strong as the golden cross. The golden cross is pretty much definite that the trend is changing. So now it's coming down, pulling it up. Um, heck, that's the last one. So now we go to the morning and see what I mean. It pulls it down again, another pullback. As long as it holds that level, as long as it gets sandwiched in between, that's what you want to see. And like I told LasagnaCat, how many times does it test the moving average or a trend level? How many times? Usually 3 to 4. So here's one test.
Um,
Here's one
yeah,
test.
because
Here's the second
uh,
test.
to like doing these because if I don't meet with this guy tomorrow, then
Here's the second test. Here's the third, and then the fourth. And there it is. So here it is, pulling up the 200. So look at, pull down the 666, pull up the 200, and you see it because it kind of flattens out. So it pulls up, and then again, just keeps pulling this down. And then finally this pull up, and then you get the cross. And what did I say that you want to see once it smashes through the 666? For order it to confirm long is you want to see it smash through the 666, come back down, test the 666 for it to continue going up. What's it do? Smashes through, doesn't touch anything. Sometimes sometimes it will hold the 200. It'll hold the 200 and then it'll work its way up the same way it worked its way up to pull up the moving averages. So it hits the 200. Where's it go? The 100. Where's it go then? The 50. And then where's it go from the 50? It smashes up to the 50 SMA. And then it's same thing over and over. So then it comes down, tests the 666, then smashes through, and then everything's aligned. And now you want to see the same moving averages. You want to see them stack up the same way. But this would be for the short play because I'm not a short player. I don't gravitate to that. I'll jump in on a pull on a bounce off a moving average or something. Yeah. And that's why I try to take all the pictures. I wasn't up all night, so I didn't take all the pictures. But you guys get the gist of what I'm saying, or at least of what I'm trying to explain. Where you kind of, the heck. So then it hits a 666. Where's it going? Psh, smash up. And then right here, and then look at, they're all stacked up, just the way we said, stacked up. 600, 200 right here, the 100, the 50, the 21. Then it's gonna do the same thing on the way down. Remember, if it smashes the 666, almost all it's gonna change direction.
So if we go like back in our charts, like we could just watch this repeat like over and over and over again.
Yeah, yeah. Sometimes, of course, when it's force up, when it won't lose the 50 and it's just tagging the 50, bounce up, tagging the 50, bounce up, tagging the 50. But that's where you'll see the R side just kind of slowly just lollygagging, just slowly come back down, come back up. You'll see it like that.
Yeah.
You won't see these big moves like this one, or this one. You won't see big moves like that. And that's why Brandon says pay attention to the speed because sometimes price action does not correlate with the speed of RSI. Sometimes these you can get these two exact same candles, right? You can get these two exact same candles in a different location and RSI won't react the same. And that's what I think he's saying is like look at RSI. If you see a big old fat candle like that and you don't see RSI like this, then it's holding. Oh, and then you start looking at the moving averages, you're like, wait a minute, it's holding the 50 right here, you know what I'm saying? You're
Mhm.
seeing it hold the 50 and you're like, But like one of the other top plays, like you said the other day, or the you showed us the other time, where it holds the 50s, right? Look at it holds the 50 RSI.
Yeah. Yeah.
Look at it again. Holds the 50, holds the 50.
Uh-huh. Yeah. Even after that, like abrupt, that was after that abrupt move down in RSI, and it just
Yeah.
came down and held it.
And it does the same for the top, even though it's kind of shy right here from the
Mhm.
50s. It'll do the same. They'll line up. But any questions, any issues, any tips, anything confusing, anything I didn't explain good enough? Um, well, hopefully that'll help you guys kind of see the moving averages a little bit better. Um, you don't have to use all the moving averages that I have. I still need to clean up. I need to get rid of the 9 EMA. I really don't use that no more. I could probably get rid of the 21 moving average. Uh, I don't want to get rid of the 50-50 cross because it's just it has sentimental value to me, I guess.
I was considering getting rid of the 21 as well. But since you explained the pulling down and flattening out, the pulling down and flattening out, like you can see that progression begin with the 21.
Hmm.
So I think I'll keep it on just until I get used to watching that progression. Like it might be useful just to help me chart out the progression while I'm getting used to that.
Yeah, definitely, and that goes with all these indicators. When we first started as elites, there was it was almost just trend lines in price action and volume. Um, he's slowly introduced TTM, RSI, MACD. Connor's introduced other stuff, but when they introduce the stuff, it's your job to go do some research because sometimes I may not explain it the right way, or I may explain it a way that you don't understand it. Sometimes Brandon does that. Sometimes Connor does that, and that's why we always say no question is a stupid question. The only stupid question is the one that you don't ask, because he's been asked the same question so many times, but each time he explains it differently. And each time I've still learned something new from that same question. So, um, I recently entered a mentorship um, for real estate, and he brought up a good point that relates to trading. He said, out of 100 new students that joined today, 10% will finish the course, the lessons. Out of that 10%, only 10% will take action. And out of those 10% are going to be the ones that are successful. The ones that out of those 10%, only 10% are consistently put in action. And those are the 1% that are successful in real estate. And that applies exactly to trading. The 10% of the new students will it's a lot of content to take in, but 10% won't watch the first 50 videos, you know what I'm saying? Once it's structured into a real class format, 10% won't finish that. 10% will finish the course, 10% will show up every day, and out of that 10%, only 10% will take action on their trades. And that makes up the 1% that are successful in trading. So, w- us members, Brandon, Connor, can teach you everything, but it's up to you to show up every day, put in the time, put in the work, and take action. Without that, you're bound to fail. And that's what we're here for, is to keep you in the game, keep you motivated, help you out along the way, help you, with your struggles. That's what we're here for. Um, so that does it for today. Since I don't see no questions. Well, last question. Should you trade your best setup only on SPY or any stock when your strategy is present? An EMA cross. The number one thing that helped me easy was concentrating on one stock. When I first started with BRT, um, I felt like I was chasing. I felt like I was just chasing, and it's not a good thing to be chasing, because you go through the chat and everybody's posting their P&L or posting their setups and their entries and their exits, and you're like, fuck, I seen that, I could have got in. That's just either you haven't put in the time, you don't have the screen time to pick up that play, or you're just not experienced with that play, which is fine. Everybody's eyes pick up differently. Um, so it's not about being impatient. It's hard for Brandon or Connor or sometimes me, but I'm trying to do my best to explain what my eyes see. Because, like, Brandon will say, "Oh, the gut algo said the squeeze was coming or said the dump was coming." That's just screen time. You're just developing those patterns in your head. And right now your head doesn't have those patterns, but once you just consistently show up, then you'll want to. But definitely concentrate on one stock. Once you're like laser, for sure, you're fucking confident every single time that you see that play that it's gonna work in your favor. Then apply it to other stocks or other indicators. The reason why I say that, because believe it or not, each stock has a characteristic. You have to find out those characteristics. Like LasagnaCat, his favorite stock was Boeing or Apple, I think. Um, but he would just concentrate on that. He's just gonna you just gotta concentrate on that stock. Find the characteristics. What's the characteristics of Tesla? Oh, it likes to hug the 200, or it likes to tag the 200, or like the 420 at moving average or whatever. Each stock has its own characteristics. Some are faster, some are slower. Uh, but yeah, concentrate on one, figure out their characteristics, and that's the best thing about SPY and futures. They tie together, and you're only concentrating on one stock. So hopefully that answers your question. Don't give up. This is not easy. I've been at this almost 5 or 6 years, and I've barely been consistent the last 2.5 years. Um, so it does take work. It does take dedication. It does take discipline. Uh, but show up every day, and I promise you, you will start to see the light at the end of the tunnel. And I've seen it with LasagnaCat. Um, he's he's coming along good. So keep it up, LasagnaCat. Here, one more month, we'll start the small count challenge. Anybody, that goes for anybody. Anybody can follow along with this series. Find your setup, laser it in. Start with that mindset, and then follow along with us. Even though we're not capturing yours, shoot us some questions. Hey, this is my setup, and I know a few traders have reached out to me. Do you have any tips or tricks? Hey, if you have time, stop by on a Friday, show us your setup, ask the questions. Um, and you'll slowly start to progress and become consistent. And that's what we're here to do is help each other out. So thanks everybody for showing up.
Thanks, everyone.
um, Thanks for the questions. Thanks for being interactive. LasagnaCat, thanks for the progress report.
Thank
Uh,
you, man. Thanks for this whole structure in these meetings. It's
yeah,
awesome.
definitely. I just want to be able to help these traders stay with it and either make it a career or at least be consistent.
Yeah, and this finding your way series, this is really really helping me a lot. It's like, it's like Semper was saying, I've come a long way, and these meetings and your help, Semper, is just crucial, helping me so much. I really appreciate it.
Yeah, no problem, man. That's what I'm here for. So you guys have a great weekend. See you guys next week. Same time, same day. Have a great weekend. See you guys.